Good morning, all my fellow crypto traders. All right, as you know, I have reduced the quantity of these updates, these weekly updates, to one time per week. If those of you who are watching the video, if you didn't know that, I posted something on my site to that extent, giving you the latest updates of what's happening here in Studama's world and what I plan to do going forward. The best way to get all the updates and all the information is to subscribe at my site, of course. So if you missed that, that's what's going on. That's why there's relatively few videos. Also, the market is kind of slow at this point. And we're just kind of doing some sideways action here in the crypto space. So I will only be doing one weekly update. Now, I may put out more than one video per week. And do the typical, say there's a big update in the crypto space, news event, or maybe I'm trading a crypto and putting out a trade alert and also using the video to kind of educate on a new pattern or something while I'm making the trade. I might put out a 3 to 5 minute video on a trade or something to that effect. But other than that, the weekly updates will only be once per week. All right. So that is the news. And the other thing is, let's see here. Well, I'll go over some of the things that I've reassessed and reevaluated this week. So let's get started. The question of the hour is, are we going to break this sideways action in the crypto space? All right, so I have the dollar chart pulled up here and not Bitcoin. But if we were to pull up our Bitcoin chart, you can see for the last several weeks, we have just kind of been going sideways. So we're going to try to answer that question here, or at least look at some valuable indicators that might help us answer that question. Let's get started. Let's do that. Wrong hotkey. There we go. All right. So we are going to start with the dollar because I have actually reassessed the dollar. You can see all of these red arrows are bull flags of some degree, some shape or form. Whether they be channels, descending wedges, or just triangles. They're all bull flags, and they've all played out. There's 1, 2, 3, 4, 5, 6, 7 so far. Dollar remains strong. This last little bull flag allowed the dollar to reach its target up. Now, previously in my last video, you'll see that I had a long trending, descending trend line, and I stated to the effect that that was going to provide significant resistance. However, I did mention that that was not totally accurate because I drew that on the weekly. Now, I took some time this week because we were above that trend line, which was at around 107, and you can see the dollar is at 108 right now, which would have meant that it broke that trend line. However, again, I said that trend line was not precise. You could have a few dollars variable on where it actually lines up. So because the dollar is so critical and important, I went back and actually tried to draw these trend lines a little bit more accurately. I'm going to just show you what I did to readjust the trend lines and give us something more precise and more accurate. So here back in 2001, 2002, you can see here's where I obtained these various trend lines. Now I've got two here that if we go over, follow down, one of them has been broken already to the upside. And this bottom one makes sense because you can see once we broke to the upside, I can even zoom here on the daily. Once we broke to the upside, the move up was very significant. And then, like the market likes to do, it came back down to retest this previous resistance, forming at the same time a descending wedge, which was bullish. And once you hit that trend line, you got to the end of the descending wedge and the dollar took off again. All right. that is the history on that particular trend line. Now let's zoom back out here, and I'm going to show you another couple that I've drawn. All right, so these higher ones, I'm going to have to zoom in to the daily. Let's see if it gets us in the right area. All right, we're going to have to move over sideways here. All right, and then zoom in. And I'm going to show you why this top one is more significant. And yes, we are focusing on the dollar because that is our predominant market catalyst and force at this time. This is what's causing all this bearish price action. Is the Fed continues to raise rates, and that causes the dollar to become stronger, all right, against all other fiat currencies. So then I went all the way back here to the start of this particular trend line. It's going to take me some time here, guys. All right, that's this bottom one here. And you can see it falls on some significant pivot ups, some pivot downs. Over here, it rested on this support for a few weeks, at least 1 week, and then came back up and touched it again. All right, so that is the trend line that is higher than us. And I also made sure that it touched some significant body point candles as it crossed our 2001, 2002 time frame. All right, let's zoom back out to the weekly, and I will show you where that goes. So right now I have highlighted a good area of confluence is up here where this purple and the black one touches. And that was right around between 112 and 113 should the dollar continue its ascent into space, which at this point it's looking likely. All right. So we have resistance up here at around between 112 and 113 on the dollar. Are we going to get there? I don't know. Maybe not. We've already broken some records here, or at least not broken records, but have the dollar has surprised a lot of us with its strength, and it continues to ascend. So, I mean, the trend is our friend, right? And we have to only assume that the dollar will continue its ascent at least until it hits 112 and 113. So, guys, if you want to be more precise, go back in history and readjust those trend lines, and you'll have a little bit better idea of where we could go. All right, that is consistent with what I'm seeing on the VIX. Right now, the VIX has broken support. All right, that's this purple trend line up here. We have broken support on the VIX, and the VIX continues to trend down in this particular channel here. All right, I'm zoomed into the daily right now. And as I said before, I do expect that if we don't, if that 200-day doesn't provide enough support for us, then once that breaks, we will come down to this further on down ascending purple trend line. All right, and that will all be a good indicator, a good release for the market to go long, at least for a short time, maybe a week or two. All right. So that market price action, let's just see what our indexes look like here. All right. And that makes sense because look at this. The Nasdaq has just broken through this purple resistance. If it can close above that today, it'll use that as support and possibly go further up, maybe to the 100-day moving average, possibly even to this next level of resistance at 171. All right, what is the SPY telling us? All right, the SPY is in this descending channel. All right, and now it is going to come up here. It looks like it's going to touch the top of the channel. The question is, and this is a big question, this is something you guys want to be watching on your charts. Will it break above that channel? Looks like we have a good area of confluence here with this level of resistance and the top of the channel. Center that a little bit right there. All right, so it looks like we're heading into that area of confluence, which will provide significant resistance. The big question is, can we break through that? All right, you can see from this head and shoulders pattern here, if I zoom out, we have not quite reached the target down. Now, we don't always make target downs on these head and shoulders patterns. So we came down to support here at 365, and that provided enough support for the market to bounce back up there. So that is pretty close to our target down on this head and shoulders pattern, which could indicate that we break to the upside of this channel. This is something that you guys should draw out on your charts as well and watch this. This is a lead indicator here. If S&P breaks above that area of confluence and breaks out of this channel, it's going to be good for a few weeks here. And that coincides with the data that I'm seeing on the dollar and the VIX. And of course, that all is going to spill over into our crypto space. So let's just jump right over to our crypto space. Which chart do I want to look at here? All right, this is pretty noisy, and I apologize for that. That's because I just don't want to get rid of all these levels and lines. I could get rid of this green descending wedge, though it is still continuing to play out and hold as support. That bottom part is where we touched several times and use that as support. And so I do still see this as a bullish descending wedge, the tip of which takes us just below 16,000. I have 16,000 as a support. I've never talked about why I put that as a support, and with 12 minutes into the video, I don't know that I have time to really look at the charts and show you the data. But basically what that was is a measurement of how much further. So if we take the Nasdaq, for instance, which most tightly correlates with Bitcoin, the Nasdaq had about another 10% to move down, though I don't know that that's going to happen right away. So I was looking at that, and Bitcoin likes to move. Was it 10%? Let's take a look here real quick. Make sure I get my facts straight. All right, so where was my target down here? Oh, okay. Yeah, 10% to the support which we hit before, and another support down here at 133. Now I have something coming all the way down to what I believe is a gap fill. Is that a gap fill? Yes. On the daily. No. I have a support at 115. I don't know. I think I'm just playing around here, guys. I'm going to have to review this a little bit more. Let me delete that one. So, my thought was that we would come down to this 133, and that gave us another, let's just use this guy here. From where we were at, it gave us approximately, I think at the time that I did the measurement, 10% moved down to 133. Though again, I see us going up before we go back down to that level. Anyways, wherever we were at, I took that percentage and doubled it. All right, now I'm getting long in the tooth here. Why did I double it? Because Bitcoin likes to double the moves of the stock market. And we'll just say Nasdaq at this point, because Nasdaq most tightly correlates. And so where we were at on Bitcoin at the time brought us down to around the $16,000 level. I think it was a few days ago. Yeah, so that's a 20% move. All right, 10% for Nasdaq equals 20% for Bitcoin, and equals 40% for altcoins, right? Because altcoins like to move around twice the factor of Bitcoin. So then 16,000 actually provided a good target, because if I zoom over here, we can see that we did, I think you got to go all the way back to 2018, 2017. Anyways, I won't do that right now. It provides some good pivot points. All right. So it is possible, though I don't see, I have these target downs to one of these target downs. This is from the head and shoulders here. All right. See, right shoulder. I'm just going to draw this out real quickly. All right. So we have a bigger head and shoulders pattern, which could play out depending upon events. Right now, crypto is realizing and recognizing systemic weakness in the market. And if we have some kind of event, a big event, it could possibly take us down to 3,000. Listen, guys, I'm just telling you what's on the charts. I doubted this stuff before. I doubted this head and shoulders pattern. I didn't think we would get to 20,000. We did. The charts told me we would. I doubted it because of how bullish all the sentiment was. And guys, what I'm starting to do is just shut down my feeds and not paying attention to Moon Boys or any of the other professionals on TradingView, and just look strictly at the chart because I was influenced by that bias. I'll be honest with you. I was influenced by that bias, and that's why I doubted these head and shoulders patterns. Now I just have to take a look at these charts. They don't always play out, but 85% of the time head and shoulders patterns do play out. That is very bearish. All right. So that's what I'm looking at. And what is potentially telling me that this weekend we will see some changes or determine a direction in price action is one of the charts that my friend Katrina put out, and I did not copy that chart. Man, I'm all a mess, guys. Let me get that chart real quick and oh, you know what I'm going to do? I'm going to open up my post because I can just show you on my site here, studom.us. All right. And my last post here, the very bottom, if you scroll to the bottom here, by the way, guys, my spreadsheet is up to date. I am a big loser on my spreadsheet so far. 3 losses in a row. The only coin that has not stopped me out so far is Shiba. All right. But because I am practicing good trade discipline, I have only allocated 10% per trade, and I only did 4 trades since I opened this trade tracker. So we will be winning soon, and when we are winning, that's when I plan to really ramp up my trades. All right, this is the chart that I wanted to show you. All credit, let me see what my time is here. Only have 2 minutes. All credit goes to Katrina. I believe her handle on TradingView is Rocket Bomb, if you want to look her up. But take a look at this. This was from November, 3 circles here. This is the 3-hour chart. 198 bars each, 24 days, 8 hours. And look at the precise fractal nature of these patterns here. All right, drop down, drop down, drop down. Each of these circles represents around the same drop in price. And here we have it again. All right. Now, what I did here is I measured out where does the end of this 290 bars show up. 298 bars shows up on Saturday. All right. So this weekend could determine either we break down to the downside of this circle, this last circle here, number 3, or we go to the upside of this trend. This Saturday could tell us which direction we are going to go. All right. So we're at 19 minutes and 20 seconds. I've got to end this video, guys. Hopefully it has been helpful and I haven't been too much of a mess here. All right, control number 3. Come on, go to my outro. There we go. Yeah, this thing is kind of messed up. And now I only have 24 seconds. All right, let's just click on it. All right, stay comfortable, guys. Don't trade too much. Stay in cash. That's my recommendation, mostly in USDC. Stay patient. Stay small if you do trade scalps or some shorts, but don't trade too much. Don't put yourself at risk until this market determines our direction. Peace, y'all. Talk to you later.